But let's just take a look at the stock price of INOX Leisure, which delivered a robust set of the second quarter numbers. EBITDA managed to surge 2x. So let's bring on board Siddharth Jain, director at INOX Leisure. Siddharth, thank you for joining in on ET Now, and a great set of numbers. So congrats on that, because the profits have grown, other parameters are healthy. So what's contributed to the growth? And if you could also add in a word on the footfalls, because spending power has come in at a time when we've experienced all-round slowdown. So what aided INOX?
Right. So, basically Q2 performance has been fantastic. We've had 42% growth in our overall revenues, led primarily by the box office, which is the ticket sales, as well as our food and beverage revenue. The ad revenue growth has been a bit muted this quarter at only 5%. But overall, we see that the content has been fantastic and audiences have come in droves to watch movies. And we believe that at the end of the day, the cinema industry is more or less recession proof to that extent, because the discretionary spend of approximately 200 rupees a ticket is really something that, which includes 3 hours of entertainment, is something that audiences don't mind spending at all. And coupled with the fantastic quality of films, it's been an exceptional quarter for us, and I think we've led the industry in terms of growth.
Okay. Siddharth, your operational performance has been healthy. Do you think that this kind of margin growth is sustainable?
So the way we look at our revenues is, of course, is broken up into a few components such as ticket sales, food and beverage, advertising, and other revenue. The growth on most of these accounts, and within ticket sales, you've got the occupancy ratios and then the average ticket price itself. While we've seen an exceptional growth in our occupancy ratio this quarter compared to same quarter last year, I don't think we'll be seeing a 500 basis points increase quarter on quarter or year on year. But at the average 30% occupancy ratio, I believe we will maintain that number going forward as well, if not improve it marginally. When it comes to ticket prices, we are at approximately 200 rupees a ticket, and I think we will be maintaining that as well as we go forward. When it comes to food and beverage, we have seen a healthy growth rate this quarter, and I think we will be able to maintain an equal, if not better, growth rate on a spend per head for food and beverage going forward. When it comes to advertisements, I think Q3 and Q4 we shall see an uptick, and our performance will be much better than Q2 on the ad revenues. So on all said and done, it's difficult for me to make a prediction whether we're going to beat all the metrics going forward, but I definitely see healthy growth going forward.
Speaking on F&B, that managed to once again deliver superior margin. So how has the quarter been? I mean, will F&B plus ad revenue likely to outgrow net box office revenue?
So the net box office revenue is a combination of two things, which is the number of people who come and the ticket price itself. As I mentioned, the number of people who come is not something that we can predict every year, but on the ticket price, we've maintained our ticket prices year on year. Whereas on the food and beverage side, more people have consumed more food, and we've seen an increase in the average spend per transaction as well. So on an average, we've seen a growth of 7% on our spend per head. We think we can better that, and we hope to do so in the coming quarters.
Okay. What's been the ATP and what's the outlook on ticket prices and spends per head?
So on the ticket prices, our ticket prices we've maintained it at, I think, 196 rupees, maybe up by a rupee. And going forward, we don't see a big change in that number either. On the spend per head, as I just mentioned to you, we had about 80 rupees per person, and we do hope to see significant growth on that number in the coming quarters as well.
Okay. You've acquired Calcutta Cine, Fame India, Satyam. What are some of the other projects, acquisitions in the pipeline? And, tell us about your movie pipeline as well.
So as a brand, we've always been at the forefront of acquisitions, and we are always open to continuing acquisitions. Currently, we don't see any large chains out there which are available, but we do keep evaluating options. In terms of the movie pipeline, currently, I think this year we've had one of the best years. And one thing that we measure are the number of films that have done net box office of more than 50 crores.
All right. Siddharth, are you worried about, this slower commercial real estate development? There's also shrinking time windows between theatrical and digital releases. Do you think that's hurting overall business for INOX?
So in terms of real estate, we currently have almost 600 screens that are operational, and we have another 900 screens in our pipeline. All our 900 screens are part of malls, and we do see a slight slowdown in the pace at which the malls are being executed, but not a whole lot. When we had committed to 80 screens a year, we think we'll close this year at 70 screens. But going forward, we should be between 80 to 100 screens a year as well.
All right. On that note, Siddharth, we let you go. Thank you so much for joining in on ET Now and helping our viewers understand what exactly is up with INOX Leisure.